Hey everybody, how you doing? It's Wednesday afternoon. It's Wednesday, so we're actually not looking for trades or trading today. The reason is we run our algorithms based on time and price, based on George Angell's sniper trading book, one I highly recommend. Wednesday is not a good day to trade. In fact, each day of the week has a different sort of trading signature, if you will, especially in a bull market, which is what we're in right now. So let's go through each day. Monday morning, open outcry, as they say, or when the bell opens, which is 9:30 in the morning a.m. New York time, or 6:30 a.m. West Coast time. And Monday morning is basically the highest volume of trade. Typically, it doesn't matter really if you're in the summer, the winter, anytime, Monday morning's the best time to take a trade or maybe even exit a trade. Now, Tuesday is a whole different story. Tuesday is what we call late rally day. And a lot of the times what's happened is maybe in a bull market, maybe there's been a little pullback, right? So the previous week, things have been going down a little bit. Maybe even Monday's a down day versus typically an up day in a bull market, right? So what happens is by Tuesday afternoon, about 2 o'clock in the afternoon, and again, this is based on George Angell's empirical data work in sniper trading, about 2 in the afternoon, you tend to see either one of two things. You see the same, or you see this, what's called a late rally. That brings us to Wednesday. Wednesday is basically a very jagged or very choppy day, if you will. There's a lot of choppy trading. So on Wednesdays, as recommended in George Angell's book, we typically don't trade. Even real traders who I know on the East Coast, a lot of them directional traders will not trade on a Wednesday. Thursday is a really interesting story. Thursday is sort of the weakest day by far. However, there's this sort of magical time again around 2 p.m. East Coast time or 11 a.m. West Coast time when the markets open and things start to change around that time. So in California, we look at the clock, it's coming up on 11 o'clock on a Thursday. If we are in the market on a Thursday morning for us, we basically look at that as some kind of inflection point. You know, if we're long and the market's up, a lot of times we'll get out of those options or maybe even the stock as the market sometimes will sell off violently. And as you get nearer to tops or bottoms, the violence is more, or volatility as they say. Friday is the last day of the week, obviously, and for trading, for me personally, I actually do a lot of my trading on Friday morning in the first hour and a half of trading. I don't like to go any further than that on a Friday, especially if I'm trading front week or front month options, because I am a directional trader versus delta neutral. We have some concepts from delta neutral, meaning a guy that has his portfolio completely balanced. So if the market goes up, the market goes down, they can make money on those volatility spikes. On a Friday, you can really get some good action on your options in the morning with strike crosses. Now that's for the advanced options trader, and even professional traders will tell you not to do it. And on a Friday morning, you basically have a lot of volatility. The market typically goes up in the morning. A lot of times it'll come down after the first half hour of trading. It'll invert, as they say, the first inversion point. Sometimes that point is pushed a little bit out. However, sometimes in a bullish market like the one we're in, things will just take off. And it also depends which market, which stock you're trading. Are you trading Amazon and Amazon's options? Are you trading Apple and Apple's options? Are you trading the futures, the E-minis? Okay, that's a wrap. I highly recommend George Angell's sniper trading book.